All right, welcome to our Google Hangout. I'm here together with Chris.
First.
TMC Tesla Motors Club handle is jesselivenomore. Yeah, he's been a frequent poster on Tesla Motors Club, and he's been sharing some of his thoughts on current Tesla stock price. And I'd love to go more in depth. I'm a big learner of just from people, and I love to just kind of learn and discuss and help. And also, I think other people can benefit from this conversation as well. So yeah, so Chris, tell me first off, like, what has been like, why have you been thinking about Tesla? You know, what's been kind of the background behind all that?
Okay. Oh, well, let me first say that. I can hear a little echo, but let me first say that I'm a relatively new poster there, but I've read some of your prior posts, and they have been very insightful. So I'm glad to talk to you, and just I appreciate being here. So for me personally, do you want a little background or?
Yeah, go for it.
Okay.
Yeah.
All right. So I work on my name is Chris. I work on a prop desk at as a trader on a financial firm here in New York City, and I've been doing that for the last 10 years or so. But just a little background, like even prior to that, in and out, I've been around the markets almost all my life. I started trading really at 13 years old when it was at the end of the .com bubble, where I had a $3,000 E-Trade account that was given to me by my parents. That really got me started into it.
Mm-hmm.
And the $3,000 in 2 years turned into $30,000. And I thought to myself, I'm pretty good at this. Well, and then a funny thing is that a year later, that $30,000 turned into $2,000. So I figured out, right then that, for one, it wasn't really that I was good, but more importantly, that experience it really shaped my investment philosophy going forward. And on the way up, it really got me interested and it made me fall in love with the markets. But on the way down, really, it's what taught me my core is capital preservation and risk management. Is really, on top of that basis, maximizing profits. So, but the core is still first and foremost capital preservation. So that's just a little bit of where I'm coming from.
Okay, so I'm curious with your day job, I guess trading. Are you just kind of day trading mostly, or are you doing more swing trades, or what are you doing?
It's primarily swing trades. It's I guess it's money management, but it's mostly medium term trading. So I'm actually in between a little bit. I'm starting to try to start my own fund a little bit, but that's still in the air. But
okay.
Yeah.
All right, cool. And so, what kind of brought Tesla to your attention?
Recently or over in the very beginning?
Yeah, just beginning and even more recently as well. Yeah.
Well, that's a funny story, probably. What brought Tesla to my attention was in 2013, really. Tesla was not on my radar. I was trading at the time. I knew what Tesla was. It was an electric car company. That's all I knew about it. Being an electric car company did not, at the time, didn't mean anything to me. As far as its potential market, its disruptive potential, I was not aware of any of that stuff at the time yet. But what did pique my interest was the stock that just went from $30 to 50, 60, 70 in a straight line. So my initial inclinations as a trader was, wow, this is really overbought. Maybe, could this be a potential short? Is actually my very first inclination of it. But and obviously I knew that it was a heavy shorted stock, a large short interest. So the idea was wait for the short squeeze to be over. Maybe it's a short. That was my very first. But then as I started to read up on the company, again, my overall trading philosophies err to the technical side. So that was my first in any trade. That's my first priority. But as I started reading more into the company, it started to make a little bit more sense. And it's like, you know what? Maybe there's something more to this than just an overbought stock right now. And then what really got my interest was when I read about the supercharging network, where it basically, as you guys all know, you have a car that can drive anywhere for free forever. Is the potential of that, especially if it's run on solar. And that is to me I mean, that's a game changer, you know, or at least that turned on the light for me. So from that on, I was not thinking about shorting it at all. It was more of where can I invest in this? And so that's really where it started. I ended up starting I couldn't chase it up there, but my initial investment was when during the fire scares, and after around the lows of that, that was my initial investment in it. And as a trader, actually, I have very few actual investments. Most of the stuff is trading. Tesla is actually one of my only investments only stocks I view as an investment for the long term. So
interesting. And what do you have a couple others you're viewing long-term investments as well besides Tesla?
Google, Amazon those are, you know, yeah, those are really the only ones that I view as a long-term investment, because the way I look at it is that something that's highly disruptive like this, I would rather, instead of bothering with trading around with it, I would rather just get in and take advantage of that. So some of the other stocks, they have upside, but I as a trader, I view that I can outperform that in the long run. But for something like this, I don't want to bother with trying to outperform this, because the disruptive potential is so high that it's easier just to hold on and ride it.
Yeah. Okay. Yeah. Oh, before we go on, I want to actually to clarify. You made a great point. Like, we just don't know, like, short-term, you know, stock price movements. Everything is probabilities, guesses. And so for any of you guys watching, this is not financial advice. We're not making predictions or anything, but we're just discussing and sharing our own personal thoughts for our own personal benefit here.
Right.
So yeah, with Tesla, I mean, there are a few points I wanted to go more in depth with. One is kind of this whole observation you made that the short interest right now is quite high.
Right.
And in past highs, short interest actually had dipped,
right.
Kind of showing some complacency in the stock, you're saying. It's high short interest right now, you're saying, you know, it's a little bit unique. Kind of go more into depth with that?
Right, right. So let me go a little bit more into that, because it's not just that the short interest is high compared to the other times. You know, because if it only was that, it could have saved me, you know, 900 words or so in that post. Short interest on its own is more than just quantitative; it's also qualitative. You know, short interest is they're not all created equally. So, for example, if in an alternate scenario where the stock price appreciated for the last 2 months, this run was fueled by just buyers getting in to bet on the Model 3 or whatever, but there wasn't a short interest down there. But after the prolonged run, shorts came in here at the top, thinking that it is overbought. If that was the case, these shorts, even if we go higher from here, their thesis has not been invalidated. If they thought that it was overbought and they shorted it at 250, if it goes to 300, you know, what they thought has not been invalidated. In fact, now it's even more overbought. So they're not a weak hand in that position. They might even add more if they were at 300. But at the same time, it would be high short interest, just like now. But it's completely separate scenarios. And another example would be, let's say a fundamental catalyst happened that was negative, that drove the short interest. Let's say at 150, Elon Musk decides to quit the company or something like that, and a shorted it based on this, because he feels that without Elon Musk, this company is not as valuable. Well, if for whatever reason the stock rose even after that to this level, his viewpoint has not been invalidated. In fact, it's strengthened, because Elon Musk is still not there. He still believes that this stock is not is not worth this much. So maybe he would short more. And so in those two scenarios, they would only be broken. These shorts would only be broken if they were significantly, if they were leveraged and significantly in pain, would be the only way, or some kind of transformational fundamental catalyst comes out. Those would only be the, because these are relatively strong hands. But that's not the scenario though. The actual scenario is that what actually happened was that these shorts, what happened was, as you know, to reiterate my post, Tesla has been trading in a range for 2 years. As it broke through 180, it represented a change in the trend. And as you guys know, Tesla is a highly polarizing stock. There's there's a lot of people that are very negative on this, but some of them, view it as a bubble. Some of them view it as overvalued. Some of them just hate Elon Musk. I don't know, but whatever the case, not all of them are short because they know that this is still sustained so far. But when it broke through 180, when it broke through 200 and 180, it is viewed as a crack, and it is viewed as this bubble is finally bursting. It's happening. So that is the reason why a lot of them jumped on and added even all the way down. And then furthermore, as it bounced from those lows, it's very predictable that they would add on more, because for the people that didn't want to chase, that were waiting for a pullback to add on before it rolls back over, that was the entry point for you to add on to your short. It's actually a logical and if your assumption is that this is over and is going down lower, that's a logical point on a retracement level. And as a matter of fact, it's not a coincidence that if you look at retracement levels at 50% of the down leg after it rose, when it got to 50%, that day was, and that day when it hit the 50-day moving average and the 50% retracement of the down leg was when Citron report came out to issue their short thesis. So even though they frame it as a fundamental view, clearly they did this because of technical levels and perceived weaknesses in the stock where it can roll over at this point. So far it all makes sense where they would short and where they would add on. The problem was that it kept going higher, and this entire thesis was wrong. What surprised me was that once it rose above around 200-ish, this entire short thesis that they got in based on has been invalidated, but they didn't cover. In fact, the short interest remained high even till the last update, which is March 31st. Since then, at the time, it was about 230 to 240, the price. Since then, it was after the Model 3 launch, so maybe the short interest has gone down a little. We'll find out soon. But until 230 to 240, these people didn't cover. But we know why they got in was that, and the reason why they got in at these levels have been invalidated. So what that tells you is that qualitatively, compared to the other examples that I gave before, qualitatively these shorts are in a bind. They know that they're wrong. They're just hoping that they see the stock that it hasn't had a pullback in 3 months. They're hoping that, okay, we can pull back a little. I know I'm wrong, but let's pull back a little bit so that I can get out for a little bit less pain. So, and it's not just them. Even for some longs who may have been shaken out on the way down, they're looking at this and saying, okay, you know what? I want to get back in, but I don't want to chase it. So let me wait until it pulls back a little bit for me to get back in. Well, the market is not so forgiving. When everybody is thinking that is what's contributing to the fact that there hasn't been a pullback, because every single small pullback has been bought. The buyers have come in because everyone's thinking that. So with the shorts that are still stuck in, and their complete thesis have been broken, but they're still in it, hoping that it pulls back. These are weak hands. These are weak shorts. It's not because of a fundamental basis. It's not because of, okay, they shorted at 250 and they're not in pain. They are in pain, and there's cracks to their psyche. So if there is a fundamental catalyst now, that's like setting fire to a match. And as it turns out, potentially there are upcoming fundamental major fundamental catalysts upcoming. So that's my overall view of that, of the short interest.
So I mean, let's talk about these shorts a bit. So I remember you were saying like at 220 or so, you thought that the people shorts would start feeling pain, at least those who got in
right.
at the last dip. So why aren't they getting out now, or are they getting out now?
Right. So two things. One thing was that initially when I stated at 220, that was just a guess based on eyeballing it. As it turned out, you can kind of view where it happened, which is right around. Let me look at the chart right here.
Sure.
It was right around 210. You can actually see where the price action kind of changed, and for 220, my original guesstimation of 220 is basically at some point it goes from, okay, these shorts thinking, okay, this thing is broken down, we're going down, and then we're bouncing. This is just a dead cat bounce. We'll roll over. At some point, though, they're going to realize that, oops, I'm wrong. So what point is it that they realize they're wrong? My initial guess was 220, but if you look at the chart, it actually occurred at 210. At 210 was an area where you can see the price action where it kind of accelerated to the upside, where you can see that they realized, and it actually occurred on March 14th. March 14th, it actually was a upgrade. There was actually an upgrade on that day by Ben Callow. That sparked some of this. So 210 really was a level where some of them started to realize they were wrong. Now, to your question, why are they still in? Why haven't they? Okay. Just to qualify this, for sure, some have gotten out. For sure, some who shorted at 140, 180. There is for sure there is some rolling short covering happening. Like some who covered, some who shorted lower, covered, but then the short interest didn't go down because more got in at a higher level. There is some of that going on, but I highly doubt that most of that is going on. And also there has been some short covering. The highest the short interest was at 34 million shares. Right now it's at 32. So there has been slight a 2 million share of short covering. So there has been a little bit. But why has the majority have they not covered? And again, just my guess would be because when you look at what has happened over the last 2 to 3 months, I don't think a lot of foreign members or Tesla investors, maybe they don't quite appreciate how unusual this move has been, especially for a large cap stock. This is not a penny stock. This is not a biotech stock. This is a, maybe the Tesla investors are they've seen this before in Tesla. Maybe they, because they perhaps they've been through the 2013 short squeeze, so this is nothing. But this is a highly unusual move for this just to, without any pullbacks, to just rally for 70, 80%. And, intuitively, you would think that there would be a pullback. So that's not just for bulls, that's for shorts too. So for a short, intuitively, even if they can admit that they were wrong, they would rather wait for a pullback to get out for a little bit less pain. So that's contributing to it. But just because it's intuitive, things are happening fundamentally that are counterintuitive as well. There are things happening that are significant that's driving this. So just because it's intuitively, it looks like it might pull back. If you're wrong about this, then there could be a lot of pain. So that's my view of why they have not covered yet.
Okay. I mean, so can you summarize that? Like why they haven't covered? I mean, are they just still holding on, waiting for it to pull back a little bit, basically?
They know. I mean, for anyone who shorted based on the idea that the stock is rolling over after it broke 180, any of those people they know that they're wrong. And by this point, they understand that was an incorrect assumption that was wrong. Now, they just want it to pull back a little bit because it's up so much with no pullback. It has to have a pullback, right? that is yeah.
Okay, got it. And then and then so do you think I mean let's talk about this whole Model 3 reveal a bit, because I thought you said something interesting in your post saying that about early adopters,
Mm-hmm.
how it's really just the early adopters who have reserved public yet, you know? I
Right.
mean, what was your experience? Did you wait in line to reserve?
So on the day of, I actually took a day off, and I drove past the Manhattan store, the downtown Midtown Manhattan store, and about an hour and a half before the store opened, there was about 100, maybe 200 people in line, and that was a huge surprise to me. I consider myself a Tesla bull overall, but I was expecting about 50 people. So, but I didn't order there. I actually went to the Brooklyn store. The Brooklyn store was just opened about a week and a half before the Model 3 launch. So not a lot of people even knew about it. And when I got there, there was about 50. So that store didn't have as many people. There was about 50 people, and that's where I took a reservation for myself. For my girlfriend took two reservations for herself and her mom. So yeah, so that was my experience there. But as far as the whole early adopter, it's clear as day that the mainstream is not an EV electric car is not in their mindset at all yet. Okay, the mainstream adopter is not environment. You know, they may be environmentally aware as far as the top of their tongue, you know, maybe on the outwards, but they're not. The mainstream adopter is not willing to sacrifice convenience, sacrifice something that is something that is worse. They're not in the name of environmental. So I don't believe that EV is even in their mind frame yet. So right now it's mainly environmentalists who are putting orders down for the Model 3, mainly tech adopters, early technology adopters, Elon Musk fans, you know, a lot of people like that, and you know, or Model S fans, you know, Model S fans, Tesla fans. Those are the ones that are standing in line, taking and remember, this was a Thursday. This wasn't like a Sunday. A mainstream adopter is not going to take a day off work to go stand in line to put on a pre-order for something that's coming out in two years. So, you know, it's clear as day to me that these were early adopters and not mainstream adopters. And so the fact that there's 400,000 now is hugely significant. That because it just shows you what the market is when the mainstream adopters actually come in.
Mm-hmm. Okay, so capital raise, you're saying how that could be positive. What's your take on if Tesla raises money right now or soon?
So people, I see a lot of people who are ambivalent about a capital raise because and some of the reasons they give is because, okay, just 3 months ago, Tesla promised that we wouldn't raise capital, and now they will. You know, that's just working into the bear thesis. In reality, the stock does not move based on a bear thesis or a bull thesis. A stock is going to move on reality, what's happening to reality. Now, shorts and longs may exaggerate moves, but what drives the stock is reality. It's not if you confirm a bear thesis, but in reality it's good, it will still go up. So let me first say that. But okay, the reason why it's important is because people need to understand that a huge portion of Tesla's valuation is based on future cash flow. Is based on its future. And, you know, any bear who doesn't understand Tesla's valuation is because they're basing it on the fundamentals of today. So that's everybody's clear to that, right? So any type of financial model from analysts are all based on Tesla's own projections of 2020, 500,000 cars projected. So that's the basis of today's valuation of Tesla. So first of all, why are we even having this conversation raising capital. Okay. The reason why we're having this conversation is because if you assume that 500,000 in 2020, we're going to have 500,000 in production. That's Model S, Model X, and Model 3. So that's about 350,000 Model 3s. If they ramp up their production at 50% a year, like they have been, you're looking at 350,000 Model 3s in 2020, maybe 200,000 Model 3s in 2019, and maybe around 120,000 Model 3s in 2018, where they're supposed to start ramping up or supposed to start coming out. So cumulatively, that's about 600 to 700,000 total cumulative Model 3 productions in those 3 years, if you assume that we stick to the 2020 plan. That is nowhere close to enough. If it is true that by the 2018 launch of the Model 3, we could be close to 1 million reservations. If that's true, then any new new buyer putting down a reservation in 2018 is looking at a wait of 3, 4, maybe 5 years. That is a terrible case for Tesla, because not only will that cost them customers, it's just money lost that they otherwise would have had. So that is a completely undesirable outcome for Tesla. So that's the whole reason why we're even talking about a capital raise, right? So if we do get a capital raise, then the 2020 projection target of 500,000 is not going to be the case anymore. Logistically, I don't know. Again, the value I can add to the board is more in technical nature, not fundamental. So as far as the logistics of how far up they can ramp it, I'm not 100% sure. But the whole point of raising capital is so that they can produce more cars than 500,000 in 2020. I'm assuming that's the case. Well, if that's the case, and let's say we produce 1 million cars in 2020 instead, well, every single financial model that the current valuation is based on will have to adjust to that now. So instead of 500,000, now we have to adjust to 1 million. So while on the one hand, it's true that raising capital will dilute the stock somewhat, but your future earnings just doubled. So while in a prior case without a capital raise, maybe Tesla, let's say, earns $10 in 2020, and if you own 10% of the company, you get $1. Well, with the dilution, with a 10% dilution, now you only make 90 cents instead of $1. But now instead of $10, it's $20. So you make 9% of $20. You actually just, instead of $1 of earnings today, you're getting $1.80. So the value just increased by 80%, even though factor in the dilution of the stock. So by raising capital and increasing production, it completely flips the financial models of all the analysts. So that's why this is only a positive. And not to mention that with the capital raise, it de-risks the Tesla from any macro disruptions because we're at the end of the day, we're in a 7-year expansion in the economy, and at some point a recession will come. And Tesla is so reliant on, at least in the past, it's so reliant on access to the capital markets to grow that in a recession, by definition, the capital markets will be tighter. So with cash in the bank, they won't have to rely on that, which is a huge de-risk. So that's not even mentioning that. That's why a capital raise is going to be a hugely positive catalyst. Mm-hmm. And to tie in with the qualitative nature of the short interest right now, a catalyst like that would provide a spark for the technicals to truly light them on fire. So yeah.
Mm-hmm. Okay. So technically speaking, like, what is it going to take to, like, let's say, take out all-time highs? Do you think it'll take a catalyst, a fundamental catalyst, or do you think
absolutely
even without one, do you think can it break through all-time highs possibly?
No, I do believe that we will need a fundamental catalyst to be able to break all-time highs. In fact, we did something like this in 2013, where we kind of consolidated right below the all-time highs until the positive earnings, until they show their profit, and then it really took off. So I'm not. Maybe we need to wait until positive free cash flow to. Maybe that's the positive catalyst, but I'm not sure if that's the case. It may just be the capital raise. So, but in order to break all-time highs, I do believe that it requires it requires a positive catalyst. But even without a positive catalyst, the technicals, I believe, are supportive in the price so far. So we could just consolidate at a high level before that happens. Again, this is probability-wise. We can certainly pull back, and in fact, whether we pull back or not is actually highly dependent on macros, and the macro picture right now is a little bit unclear because we are objectively we're at the highs of the range of the past 2 years. So I don't think it's very binary. We're either going to break higher here or we're going to pull back. So, and I don't really have a really great read on the macros. So it is somewhat dependent on that.
Got it. Yeah. Yeah. So, I mean, what I'm hearing you saying is you think, I mean, it could go either way. I mean, it could pull back depending largely on macros or different things, or there's upside, especially if there's a fundamental catalyst, like a capital raise, I mean, I would imagine the capital raise would have to announce production, like ramp increase, or bringing
Absolutely.
up, the targets, increasing the 2020 target, et cetera.
The whole purpose of the capital raise is for that, and the positive catalyst is not the actual capital raise. The positive catalyst is the increase in future production, which will have to have every single financial analyst of the stock readjust their whole model, because their model is based on the 500,000 K per output.
Got it. Yeah. So, I mean, you're looking at possible, like a lot of analyst upgrades possibly if they can, boost their production targets.
That's a case, but it's not even about the analysts. It's the market as a whole. That's how they're valuing Tesla. The market is not wholly dependent on analysts. The market has a mind of its own. The market is not stupid. The market, that's how they're valuing Tesla as well. Is that what is their future output? And they're not valuing it based on today's output. So they're valuing it on the future output, which is another reason why I feel the Model 3 pre-order numbers are not yet completely priced in, because the pre-order numbers it's a de-risk of, because before the market wasn't 100% sure what exactly the future, the demand of this thing is. But now it's a tangible, indication of what it is. So far we've gotten a $20 pop based on the pre-orders. I think over time the market will come to appreciate the gravity of the pre-orders, and yeah.
Yeah. Actually, I mean, to be honest, I share a lot of actually your views, because, I mean, I want to bring up something too, because on the bullish side, I see, these reservations were beyond almost what anyone expected.
Right.
And it definitely sets up, I think, an increase in future production targets, which increases future cash flows, which basically changes the whole equation on the stock.
Exactly.
And it also, in my opinion, also changes where Tesla could potentially end up 5, 10, 15 years from now. The faster they can grow now, the better the chance they have to become an even more dominant, company in the future. And so, I mean, there's definitely and I don't think, people have completely grasped what 400,000 reservations in less than a month or 3 weeks, what that really means,
Right.
I mean, there's that type of demand just isn't out there for any other car in the world,
Right.
Or even it's rare to find a product like that,
Right.
that has that type of demand. I think it's going to take a while, and I do think, I think a capital raise could be the thing if they really lay out clearly exactly what they're going to use their money for, and what targets they're shooting for. If they can even somehow bring up their target dates of deliveries, or even when people get their cars, etc. But I mean, I want to actually get your thoughts on kind of like the downside risk a bit, because on one side, there's this bullish, scenario I think that's really shaping up, which is, Tesla just racking up these reservations, for the next year or two, or foregoing, and perhaps raising money, just like production capacity, etc. But then we also have, I think, on this other hand, we do have a macro risk. I mean, we've had this, good economy running for quite a bit, probably 7 years going, 6-7 years, and how long is this going to last? Like I kind of personally think that there are going to be increased recession risk. I think my personal opinion is the risks it basically increases as time goes on. Like next year or the following year, because a economy can't run like how it is forever. There has to be cycles. In a cycle, in a down cycle, if we do have a recession, let's say we have a recession, whether it be next year or plus or minus, whatever, or 2 years from now, whatever, it seems like the market would really punish Tesla. I mean, in some ways, because it is such a future-driven stock, and but on the other hand, if they have the reservations, and if they have enough capital, maybe they'll be somewhat protected from that. But in a recession, all high growth stocks, generally will get, slashed a bit. I mean, what's your take on the risks of not just recession, but the impact of recession on a stock like Tesla?
Right. So I'm all about downside, evaluating downside risk and stuff like that. As far as so not only is Tesla a high growth stock, it's like a double whammy, because it's also highly capital intensive. It's highly reliant on the capital markets, at least in the past, which is why on the earnings call at the bottom, when they said that this year they didn't need a capital raise, that was a huge statement by them. Whether it was true or not, it was a huge statement to say, because that fear is on top of the fact that the valuation is highly dependent on future on its future growth. It's highly reliant on capital markets, so access to capital. So in a recession, that access gets tighter. So that's why the impact on Tesla is greater when it comes to that. But I do think that these pre-orders for the Model 3 is enough of a game changer that it's kind of like pre-Model 3. I think you made a post on this. It's like pre-Model 3 and post-Model 3. And I think you were talking about when they actually start delivering the car, right? Just even now, with the with the market seeing the demand for the Model 3, there's a bit of a pre and a post, where it's like from this point on, their access to capital markets, even in not so good times, is because there's something tangible here now. For you can tell the banks or something like that. You know what, my Model S demand, I'm production constrained on Model S, Model X, but there's always a little bit of doubt there. But when people are lining up for days, and hundreds of thousands of orders, it's like there's something tangible there. So there's like a bit of a floor for that, even in a negative environment. And as far as the overall macros, I'm not, again, like I said, we're at the top of the range, so we're either going to break higher or pull back. But I'm not seeing a huge like a crash risk or something like that. And on our prior move down, there was some fears of that, actually, especially if the due to oil defaults and stuff like that. There were some fears that this time, even if we do pull back, it's my view that it would be more of a the markets, the indices, the major indices are just consolidating at a high level. And if you actually, as a matter of fact, if you look at the Nasdaq composite index, not the Nasdaq 100, the Nasdaq composite index, all we're doing right now for the past year and a half, 2 years, we're consolidating at all-time highs. So we've gotten back to the all-time highs of the year 2000, and really we're just consolidating there. And you know, it's true that and I hear, working in the financial industry and especially trading stuff, I hear all the time about the bearish views of the economy, how you know, this has been the weakest recovery of all time, and you know, there are a lot of things wrong with the economy, and while that's true, and it's like interest rates are low, or so low that, and they're going to be low for a very long time, it seems now, and you know, and people are negative about that, but a bullish scenario of that could be just that, you know, the economy is in a transition period of changing industries, where, you know, the U.S. economy has been losing manufacturing jobs for so long that now, if we're just transitioning into different sectors, it could be a prolonged time of, instead of a crash, just the market stabilizing for a while before, you know, we can have a nominal recession, but the market doesn't have to necessarily crash based on that. It can just be, you know, a long period of time, especially with interest rates so low. It's supportive of the markets, because there's no alternative. So we can just be waiting until the next growth industry that comes on. And perhaps it's a transition of the entire. I mean, if the transition of the entire transportation industry into something completely different would provide a huge amount of growth. You know, so prolonged low interest rates, it could just be stabilizing the markets for a while of low growth until we break higher from there, instead of a major crash. Now, that's not to say a crash can't happen, but I'm a little bit less bearish on that, based on that.
Mm-hmm. Got it. Okay, sounds good. Yeah, interesting stuff. Yeah, what, as a trader, like and observing Tesla, like do you think it's actually like realistic for a non full-time trader to really be guessing the price movements of Tesla and actually come out profitable at the end? I mean, or do you think if Tesla's you know, it does well in the future, is it just better for the non full-time trader just to buy and hold? You know,
Absolutely.
not try to like guess ups and downs.
From my experience, I mean, if again, a non full-time trader knows whether they're profitable or not. If they are not profitable, then I'm not sure what's going to change that. And so trying to time the markets without being it's not just about full time. Even if you're full time, you know, trading is very hard. It's extremely difficult, and so you know, if you have a fundamental view of Tesla out in the future, it's absolutely a safer bet to be a long-term investor of it. You know, trying to time it, if you are successful in that in the past, then of course I would encourage you to do so in the future. But you know, if you have not had any experience in it, whether good or bad in the past, and you just feel like you should want to try, I would say keep that keep your test capital very low, just to see if you can do it or not. And if you can, then great. But if you cannot, then absolutely stick to a long-term investment. Yeah.
Mm-hmm. Mm-hmm.
And especially, I see a lot of. I know a lot of you guys do options and stuff like that. For myself, I usually, as far as options, it's more of a protective insurance is how I look at it, because you know, directionally, as far as trading goes, directionally is hard enough. Where to get the timing right as well is, I feel like my edge is just it's you know, it's not high enough. So if people can do that, then absolutely you should continue to do that. But
yeah, I think some people on the forums, they just got like I don't know. I think it was a different period, like in 2013, you know, where it was like
Oh,
to
well,
get into options, like when the stock is like, you know, 30, 40 or $50, and you think, you know, the Model S is the best car in the world and that Tesla's going to survive.
right.
And the market cap of Tesla at $30 was like $3.5 billion, you know? And if they're going to survive, they're going to be, you know, much valued much higher than that. I think, yeah, to me, it was like more of a survival thing. If Tesla survives, then Tesla's going to be worth much higher. And a lot of people were betting that they were going to just go bankrupt. And so I think in that environment, you know, a fundamental person or a person who has a view of Tesla fundamentally, you know, really believes in the company, it seems like that's an easier option play than now. It seems like right now, it's just like, it's not so straightforward. I don't know. I mean,
Well, I think two things I'd like to say about that is that, for one, at the time, I think the market, perhaps, again, the Tesla has only been, at the time, only IPO'd for about a year and a half or so. So perhaps there was a wide gap between reality and market expectations, where the market didn't really understand Tesla. Now, we've had a long enough period where the market can understand a little bit more. And another thing is that what happened there was, you know, the combination of a short squeeze that drove it there, that drove it up like that. So a short squeeze is when you when the sellers were forced to buy. So whenever that happens, it is overshooting its fair value. So technically, it was overvalued. But a brilliant thing that happened there was that, you know, even though it may have overshot its valuation because of the short squeeze, because of forced buying, Elon Musk took advantage of that and raised money, you know, raised capital using that, and to increase the future value of the company, so that at the time, the share price may have been overvalued because of the short squeeze, but it caught up. Because of the future value that he added, and that could happen again in the future. Perhaps that's his plan, is to use the shorts as that. But that's what's brilliantly that happened. But now it's a little bit less of a. I feel like it might be less of a opportunity for that to happen, because the market is a little bit wiser to Tesla now. And another thing is, as far as technicals and fundamentals, you mentioned the fundamentals. Fundamentals is simply, and a lot of people I think on the forums are maybe a little bit averse to technicals, you know, like drawing lines and stuff like that. That's not what all technicals are. Basically, fundamentals are simply evaluating a company and evaluating the future of the company. Technicals is simply evaluating the stock, evaluating the buyers and sellers and their interactions and the dynamics of the stock. You know, I see a lot of people talk about short interest, and that's a technical indicator. That's not fundamental. A short interest does not affect the company; it affects the stock. So that's actually a technicals. So, you know, it's not all just about drawing crazy lines. It's just anything that impacts the psyche of the buyers and the sellers, and how that dynamic impacts the stock price. So that's all it is. Yeah.
Okay, sounds good. Let me see. Before I go on, there's several viewers watching live, so we're gonna ask if you have a question, just enter it into the Google Hangout page, the question, and then we'll try to address it before we leave. Yeah, I don't want to take up too much of your time. I think it was a decent, you know, good conversation to go over kind of your general views. So, what do you think Tesla's waiting for to raise capital? Like are they? What are the variables in terms of timing? You know,
Right.
Do you have any idea? Like, what's your guess?
Again, I think the most value that I can add to you guys or the forums is more as far as the dynamics of the stock price and the interactions between the buyers and sellers. My guess is good as I think a lot of you guys have great ideas as far as the company and the fundamentals. I mean, most of you guys, some of you guys are a little out there, but so to answer that, I mean, my guess is as good as yours. Your guess is as good as mine, actually. And but I think I would imagine that they're in talks right now as far as raising capital, favorable deals as far as raising capital and potential partners, investors to raising capital is what I'm guessing. And perhaps, and I know somebody mentioned that perhaps they're waiting for free cash flow positive so that you can raise capital at a higher price that's more favorable. But that could be the case. I'm not sure if that's the case because of the timing issue. Like, I don't know how much longer you want to wait, because if you wait too long, then the 2018 Model 3 production levels is key, because that's how long the new orders are going to have to wait. Right. So the more we wait until the more we delay raising capital and starting to ramp up, the more everything gets pushed back. So I'm not sure how long we can wait, which is why I really don't want to bet on, when exactly.
Yeah, because like, I don't know, there are people, on the forums, clamoring about perhaps the free cash flow positive quarter, maybe Q2 or Q3. But yeah, in my opinion, I don't know. I mean, my personal just like guess, I don't know if that's really the crucial catalyst. I don't know. I think this whole Model 3 reservation demand, I mean, to me, that's the number one story. And what Tesla can do to capitalize on that and, increase their production targets by raising capital, to me, like, who cares about free cash flow positive? Like, as an investor, I care about the trajectory of Tesla's growth,
Right. So free cash flow positive, the reason why anyone even cares about free cash flow positive, I mean, I know because it's been mentioned so much that it's in investors' head that, we have to have free cash flow. The only reason why it even matters is that free cash flow positive, it's proof that the company is not reliant on capital markets to grow. So that's all it is. But if the capital markets are more than willing to give you money, then it's all about if Tesla can grow, if Tesla can get the money to grow, that's what's important. Showing free cash flow positive shows that they're not beholden to the market to give them the money, that they can do it do it themselves. But if the market is freely willing to give you the money, then it's not really that important. And what is the biggest? What will have the biggest impact on the stock price, like I was saying before, is what every financial model is based on, which is its future profitability, which is based on its future production. So once that is adjusted, the stock price will adjust as well. Its current stock price will adjust to the new expectations.
Yeah, I mean, I think that one of the challenges is because I think we have both somewhat of agreement that capital raise is good, and if they can increase production targets, like this could be a huge, catalyst. To me, one of the difficult challenges is Tesla had, a poor Q1 delivery count, below guidance. Model X also is having trouble ramping up. There's some delays, some quality issues. So, I mean, it's tough because like once they have Q1 earnings in about 2 weeks, it's like, they don't have blowout delivery numbers. So the revenue is obviously not going to be blowout. And then Q2 guidance might not be that fantastic because there were some Model X delays just recently. They actually slowed down the whole production line the past couple of weeks. And so Q2 guidance might be a little weak. And so it's like, it's kind of tough to raise capital right after Q1. I mean, another idea I was thinking, their power pack kind of energy division, it seems to be, they just opened up their configuration. They could be having some strong guidance for that, or I don't know, maybe reveal some yearly guidance, for 2016 or something. That could be very interesting, or even further out. I don't know, because it seems like if they're going to have poor revenue and poor delivery numbers for Q1 and guidance for Q2 might not be fantastic, it's like they have to come up with something to not just support the stock, but also, if they're going to raise right after that, to support the raise as well.
Right.
If not, my question is why don't they just raise right now before, why didn't they just raise the week after or a couple weeks after Model 3 reveal,
Right.
If they're waiting, what are they waiting for, so.
Right. As far as that goes, the Q1 numbers are out, so I believe that's already factored into the stock. What we don't know is the Q1 revenue is more or less is factored into the stock. So I don't think that would disappoint. But what the costs were, what were the capex, what were what were their costs? That I'm not sure what that is. There could be a potential for an upside surprise for that. There was a lot of talk about the slowdown of the supercharger build out. So if they were in a cost cutting mode, so that's a question mark that I have. Again, this is not my expertise. I think there's a lot of better people to ask about this. But so that's a question mark for me. As far as a Q2 guidance, again, if it is weak, then that could be an issue. Again, I don't have an opinion on that. I don't have a strong opinion on that. I would say that. I will say one thing though is that what day is today? Today is the 24th, I think, 23rd. I believe on the 26th, so in 3 days, is the Beijing Auto Show, and I believe the Model X will be debuted there in the Beijing Auto Show. And it's interesting because, in my opinion, the Model X was made for China, or a primary reason for the Model X was made for China. Tesla had very high hopes for China initially, and those hopes were kind of dashed, and it was kind of the launch there was not successful. And but the Chinese market is incredibly important. They're the world's largest luxury car market. They're the largest growing car market. So it's clearly the Chinese market is, and they're the largest EV market and fastest growing EV market. So Tesla's interest in China is obviously there, and its importance is obviously there. So the fact that the Model S, the initial launch there, was kind of failed, and some of that had to do with the price. Some of that had to do with the whole public perception of EVs and the charging and how that works. And some of that had to do with these wealthy people who buy this. They weren't really into the back seats and stuff like that. The interior, the Model S's interior compared to similar competitors is a little bit lower. So it's all those things kind of factored into their initial launch there. I feel like the Model X addresses all of that, like specifically targeted. And as a matter of the HEPA filter, I think when Elon Musk was talking about that, a lot of the U.S. People were like, "What? What is this?" Mm-hmm. That was 100% targeted at the Chinese market, where air pollution is a huge deal there. In fact, just this year they had multiple red alert for smog. So that, to me, that is 100% targeted. So it's interesting that the Model X, even though it's launched for a few months now, it hasn't even launched yet in their primary targeted audience. And in 3 days, we're going to see it there in the Beijing Auto Show. So again, this is just something, I'm not sure how that will impact things, but I mean, it's certainly helpful for the product to finally be in the market where it was targeted for, in my opinion.
Yeah, I have mixed opinions about the Model X personally. Yeah, I think it's a bit of a confusing car for some people, because it's like, I was at a test drive event, and people were watching, the Falcon wings go up and down, and I'm asking people, are you going to buy the car? The reservation holders,
Right.
And it's hard. Like, some people were just scratching their head, and they're just like wondering, is this gonna like work after a few years or not, or is it practical? Does it hit things? And it's I think it's gonna be successful, a car, but I don't know. I think it's. I don't know. I think personally, a lot of the reservation holders might not configure and buy the car, and but to me, it probably doesn't really matter, because Model 3 is where it's at. Go ahead.
Okay. Oh, sorry. I think that is. I think it's clearly the Model S is a more practical car compared to the Model X. I think a lot of people say that the Model S is is targeted for the wealthy buyers, but in reality, a lot of mid-income buyers also stretched for it. Because it is practical, it does save fuel efficiency. There's a lot of uptick in going from $50,000 cars and then stretching a little bit to go to the $100,000 car. I think for the Model X, that won't be the case, and it will be a lot more targeted to truly the actual wealthy or the top end buyers, especially in the U.S. And I think that works a little bit more towards the whole China market thing too, because the Chinese are, I'm Chinese. The Chinese are, especially over there in China, in mainland China, there's a lot of new money there, and they like to flaunt it and they like to show it off. And so the Model X may not be the most practical of cars. I think it's more practical than a lot of people think, maybe, but it's not the most practical car. But it kind of even more targets that audience where if these wealthy buyers want to put their money buy something, they want to show it to people and have people know, and that's how they think over there. So that works a little bit more towards that's the targeted audience, which is what I think about it. Yeah.
Yeah, makes sense. Sounds good. One last point while we're talking about this, or actually just talking about Tesla is on the Model 3, I was thinking actually it's interesting because they seem to be taking a different strategy with Model 3 where they're more open, like to showing the car more often. Motor Trend did a whole photo shoot this past week. And, the Model X, it wasn't like that. It was completely like, like hidden type of like thing. But I think, that could help with stirring demand. Like, just if they just keep on showing it, like get some magazines out for some more test drives. And I think Tesla in a way can control the demand and the reservation rate in some ways, where if they want to increase it more, I think they could push some stuff and show more of the car a bit to the media. Because the more the car's out in the media, the more people are going to ask questions about it, And yeah, I agree. I think there's a ton of people that, haven't reserved it, but who will want it, or who are thinking about it as well. So I think the reservation potential is quite immense.
Right. What will really spur reservation for Model 3 is when they announce a production increase. Therefore, people won't have to wait 5 years now. Because a lot of people are thinking, what, there's 400,000. I'm at the end of the line. I don't, I'll rather wait for it to come out first. And then another thing is I'm not going to be able to get the tax rebate at all now. Well, if they tell you that they're going to increase production, and by the way, the whole narrative now in the media is, can they meet demand? And that's not just in the financial media; it's in the mainstream media, and that's targeted to the buyers. Is that it's the media narrative is telling the buyers, asking them, can they meet demand? Well, if that's a question in my head, maybe I'm not going to order it right now because what's the point? Well, when they lay out a clear plan to increasing production and shortening the wait, that will spur a new wave of pre-orders. And one more thing is for the Model X, like you said, they didn't show it as much in the beginning. I think for the Model X, I know it's popular for people to say that it was delayed by 18 months or so, but I think in the very beginning they were just clearly focused on ramping up Model S because the demand was so much higher than they thought. So I think the true delay wasn't really 18 months. So perhaps that's why they didn't show it as much in the beginning, because what's the point of getting so many more pre-orders when we're not even focusing on this yet? But I think they are truly targeting a Model 3 launch in 2 years. Perhaps maybe they delay it by a few months, but what's a 3-month delay? I don't think that's even a big deal. But so the media might harp on that, but maybe they delay it by 3 months or 6 months, but I don't think anything like an 18-month delay is even possible on the table.
Yeah, sounds good. All right, we're gonna wrap up. Thanks for just chatting here. I love talking Tesla, and thinking about these things on a deeper level. So very, very productive. I'm sure other people will find it helpful too, especially because we'll archive this and let people watch it as well. So
cool.
Thanks again, Chris. Yeah,
thanks
hope you do it again.
Yeah, thanks for having me.
All right, we'll see you. Bye.
All right, bye-bye.